the plans administrator and her and Todd? Troy. That one name. Troy are going to be assisting us with sales no longer. Another person here today is Lindsay. She's helping represent for Bonnie. Bonnie's daughter's having a baby, so thank you for being here, Lindsay. We appreciate that. All right. So we'll go ahead and start off. Anybody in the public have any comments they'd like to make? Okay, Mr. Otwater. Thank you.
Just a very brief one. If you could turn to page 20 of the investment report. Well, it'll say page 20 on the bottom of what would be the printed version. So it's the comparative performance trailing returns as of March 30th.
Page what?
28.
Thank you.
Okay, is everybody on that page?
Page 20 of 83.
28.
Oh, 28. Okay.
Got it. It's the comparative performance trailing before return.
Okay, everybody there? I just want to point out that no investment management expenses that has been accrued for the fiscal year. So if you look at the fiscal year to date, total fund net is a 14.54% rate of return. That's the net, so that's after expenses. The gross, which is before expenses, is actually lower at 14.50. That's impossible unless the management guys are giving you money back. And if you look at the quarter, the total fund net is 6.52. The total fund gross is 6.53. That's only 1 basis point of expenses. So, I've brought this up before. I don't understand what ANCO is doing on this. I mean,
Bob, can you take a couple steps back? I've lost.
Okay, sure.
So I'm I'm a little trying to figure this out. We're at your comparative performance trailing. You're at the total.
Okay,
gross?
Total
fixed income gross. Is that what we're talking about?
No, we're talking about the total fund net at the top.
Page 20. 28.
Top row of figures.
Okay, thank you.
Okay, sure. No,
I was.
okay. So go over to the second column where it says FYTD, which is fiscal year to date. So that's the first 6 months.
Okay.
It shows that the fund's net performance. So net performance is defined in the business that I did for 33 years is your return after subtraction of investment management expenses. So that shows 14.54%. If you go down to the next gray column, gray row across, it shows total fund gross. So that's your investment return prior to investment management expenses is 14.50. I mean, that's impossible.
Unless you subtract negative figures.
Yeah, right. Yeah. So in other words, that not only are the investment managers working for free, they're actually giving you money back. So those numbers are garbage in, garbage out. And the fiscal quarter only shows 1 basis point of expenses. So this has been an ongoing problem. I brought up before. They're not expensing things properly. Now, the response I got from ANCO before was, well, we didn't get the bill from the investment manager. That's not the way you do things. You know there's going to be a fee that's come. You just accrue it regardless of the timing of getting the bill or not. So, I wasn't going to bring it up until I looked at the fiscal year. I saw it was off on the quarter, but I just looked at it now. The fiscal year to date is even worse. And you're 6 months into the year, should be accruing expenses properly. That's all. So I just wanted to bring that to your attention. So thank you.
Can I ask you a quick question? Did you spoke to Brad about this?
No, I just came in today. So no, that's not my job to talk directly with him. That's your job.
Well, it is your job. It is our job. It is your job. You're bringing it to our attention, so obviously you have an issue with it. So you want us to take care of that.
Yes.
So I appreciate you bringing that up. When we get Brad in his section, if you want to hang out and you don't want to, maybe Brad will give you a logical explanation as to why it is. I don't know if some of these bills are paid forward, reverse, how we talk about
Yeah, but Mr. Chairman, that doesn't make any difference. I ran mutual funds from 1981 to 2014, and what you did was actually each month or each quarter, you guys use quarters, you have to accrue the expense regardless of whether there's a cash payment or not, because otherwise the numbers are not, the investment numbers are not right. You know, let's take an example where, let's say,
I want to kind of keep moving. You have an issue with the fund year-to-date net versus gross. So when Brad gets up, if you don't mind hanging out, we'll ask Brad to maybe give you
I'd be happy to do that, Mr. Chairman.
And if you didn't accrue expenses, then the numbers would be the same, gross and net.
Well, actually, what's even weirder is the gross is lower than the net.
That's my point.
Yeah, exactly. Yeah, so.
Even if they say we're not accruing expenses,
Yeah.
okay, then
So it said that
extra money
they
coming?
not only did they work for free, they gave you money back. So
I understand.
Okay, thank you.
So we'll ask Brad. Thank you for that. Okay. Anybody else have anything to? So we'll refer, to Brad for that. So we have the next is approval of the minutes. Anybody had a chance to look at them? If there's any additions, deletions, any changes? I didn't see anything yet. Anybody here, gentlemen?
And one thing I want to point out, trustees, is to quickly get to a different item. If you tap on the screen, some little icons come up, and the one farthest to the left, it kind of looks like a note card. And if you click on that, bookmarks will come up, or you can skip to different agenda items. So if you want to go back to the minutes, click on the bookmarks and click where it says approval of minutes, which is page 2 of 83 in your packet.
Thank you.
You're welcome.
All right, so if there's nothing, there's no changes or additions, deletions to the minutes, do I have a motion?
I move to accept the minutes.
Second? Second. All in favor? Aye.
Aye.
Okay.
I think there was sort of a tie there with Kyle and Fred. Okay.
We're going to go in alphabetical order, so we'll let that go. Okay. Old business. Anybody have any old business they like to bring up, gentlemen? New business. Update on trustee terms.
Yeah, there's just a quick update from me, and you probably already know that Kyle was reelected by the membership, so he will serve another term through March 1 of 2026. And I think there's one other trustee update.
And while I have continued to enjoy these meetings and the work I do, I've decided that this is going to be my last meeting. And so that should give you folks enough time, 3 months till the next meeting, to, among the 4 of you, decide on the 5th member. I mentioned that while I don't think I've slowed down mentally, physically I've slowed down a great deal. And 2 weeks from today, I will hopefully be celebrating my 85th birthday, so I think it's time. Again, I've enjoyed being here.
Well, for myself, on behalf of the board, I think Jerry and I have been here the longest for the past 10 years. I can tell you that Jerry has, in my opinion, been the voice of reason. He's a very great asset. He's done this in the past. He's, I call him one of the guys too because he came up that way. He's been a definite asset to this board. Unfortunately, he has to leave. He can't offer you any more money, so that doesn't work. But I personally appreciate everything you do, and I wish you all the best of luck and good health, and for another 10 years there at least.
Thank you for the kind words.
Okay. You're going to stay for the rest of the meeting, all right?
Yeah, well, the truth is I just wanted to get out of doing that June thing that we have to do every year.
I'm I'm sure Lindsay will definitely, I think that's part of her update right there, right, Lindsay? Okay, so our,
Thank you for your service.
Yes, here. Thank you. Thank you all.
all righty, so our next new business is the actual expenses as of last fiscal year, September 30th, 2023.
Yes, sir, and this is on page 6 of 83 in your electronic packet.
Page what?
Page 6 of 83.
Okay.
And all of your administrative expenses are listed there in the left-hand column. These are basically your consultants, attorney, actuary, administrator, insurance, and some other fees that are administrative. What was budgeted is in the second from the left column. You budgeted $141,500, and you came in well under that at $96,352.32. I did include this year's budget in the far right column just to show you that you guys you budgeted well again for this year. So if there are any questions about any of the expenditure lines, I'm happy to entertain those. If not, a motion to approve the expenses would be in order.
Okay, I just have a couple questions. So we've got our budget moving forward with this year's, and we've already figured in all our additional expenses. Anybody have any questions or any deletions about the? I think, you know, a couple of the council members are here as well. I mean, I would like to say that we are, you know, trying to be fiduciarily responsible. You see that we budget $141,000. Obviously, we kind of go way over, but we're way under budget too. So that says a lot about this board trying to keep things within those realms. So I appreciate everybody here and their fiscal and fiduciary responsibilities. Okay, so do I have a motion to accept the expenditures moving forward?
I'll make a motion to
Do I have a
approve the
second?
expenditure items.
And do I have a second?
I'll second.
Okay, Jerry, you second them all today. We got to get your name in there. All those in favor?
Aye.
Okay. Thank you, guys. Okay, so I think now, Chrissy,
Yep, I'm going to get Brad Hess
get
on the
Brad
phone.
on the phone.
And hopefully this comes through okay. Heather and I tested it earlier,
Uh-oh,
and
Heather,
it sounded good, so.
you're on the, there we go.
Hey, this is Brad.
Hi, Brad, can you hear us?
I can hear you, yes.
Can you guys hear him okay?
Yes.
Okay, hi, all right, so we just got to reports. I know there's a couple agenda items. I'm not sure if we want to address Bob's concerns first or move into Brad's items. I'll let you decide, Mr. Chairman.
Bob, do you have a few minutes, Bob, or do you want to try to,
And your pleasure, however you want to do it.
Brad, that's Tommy Van Devener. There seems to be Mr. Alwater has brought to our attention the fact that on the page, I don't know if you have the same format that we're looking at, but the composite gross and net performance for the fund,
Yeah.
that we have variances in the gross and net numbers that actually in one case I think the net exceeds the gross performance. So, and this would be for I think it's for several time periods. I think
Both fiscal year to date and quarter.
year to date and quarter.
Where are we looking at, guys? Where does net exceed gross?
Brad, we're on page 20, the comparative performance trailing returns for the total fund, specifically quarter and fiscal year to date.
well, it's 20.
It's your, Brad, on your report, it's page
20.
Yeah.
Yeah, page 20.
Yeah.
So if you wouldn't mind addressing that, Mr. Otwater has some concerns about the discrepancy in the
Yeah, sure. I'd be happy to address it. So overall, for Mayor Atwaller's benefit, for the board's benefit, when we're producing performance results, we are following the GIPS standards for reporting time-weighted returns based on the modified Dietz method. That's the industry standard for doing this. The reason why the net is greater than the gross for the fiscal year to date is because we actually got a rebate from Intercontinental Real Estate because they get paid an incentive fee, and they did not hit their high water mark, or their preferred return rather, given the downturn in real estate. So we actually got a credit of previously paid incentive fees from them in the first fiscal quarter, which you can see in page 19. You see the management fees is actually a positive number. So that's the reason why you see that small difference and better returns net than gross. In terms of the other, manager that we pay, that pay fees, everything is institutional mutual funds other than Intercontinental and Manning & Napier, both their equity and their fixed income products. We recently switched from paying them in advance to paying them in arrears, to remind the board. So they had already gotten paid. So they have not charged us for the last couple quarters because we did that switch, and they basically owed us time, right? So that is the two factors that explain what you're seeing there on the fiscal year to date difference there. Does that make sense?
So I kind of get it. I just want to be able to, move forward, that we don't have, maybe sometimes if, we do have people out there that are scrutinizing everything we do here. Brad, so that, thank you for finding that. And so, should this come up again, that you see something that's not working out, we need to know in advance, because somebody's going to find it and they're going to bring it to our attention. So I don't know if there should have been some type of addendum or a note that, hey, just in case you look over this report with a fine-tooth comb, you're going to see a couple areas that might you need to address.
Yeah, Brad, like a footnote in effect on that page would have been helpful. And just for clarification, was that added at the end of period or beginning of period? Or intra-period?
Are you talking about the incentive fee rebate?
Yeah.
Yeah, I'd have to go back and look at the statements of when that was. I think it was sometime in December.
Right. Just because it was an item that was brought forth today, I think it'd be helpful to know when that credit was actually credited back to the fund, on the date of the credit back.
Yeah, I can go through the statements after my presentation and let you guys know that.
Okay.
That would be appreciated if you could, send that to the board once you got all those numbers, so that we can.
So it's really hard to hear the chairman, so I'm not sure if he's asking me a question or not.
Yeah, Brad, Rick was just asking that once you have the date that the funds were, or the refund was paid, to just let the board know.
Okay, that's no problem.
Was that correct?
I could do that before the end of the meeting, no problem.
Okay, Mr. Otwater, does that address your concerns?
He gave his explanation. I'll let go of that. So thank you.
Okay.
And Bob says thank you, Brad.
You're welcome.
Okay, Brad, you're still on the clock.
All right. All right, guys. So on the agenda, and first of all, thank you for allowing me to participate over the phone today. I had a personal situation that arose that required me to stay here in Orlando. So thank you for the flexibility to do that. A week after we met last quarter, I sent you all an email. I called Chairman Rick to let you all know that we were being acquired, and that acquisition did close April 3rd. So ANCO was company called, well, then Mariner Wealth Management. Now they kind of rebranded that they're just Mariner. This is a company that prior to acquiring Anco Consulting was basically fully focused on wealth management, high net worth individual investing, trust services, tax planning, tax strategies, estate planning, et cetera. Did not have a institutional pension consulting or defined contribution consulting vertical, which is what 100% of what we do. We don't really have. I think we have maybe, of our 750 clients, a handful of individual investors from legacy things back in the early 2000s. But 99-point-something% of our business is all institutional consulting work, like we work with you all. So, to give you an overview of Mariner, they're based in Overland Park, Kansas, employee-owned firm. They do business in all 50 states, I think, have offices in 39. And like I said, they historically have just focused on high net worth individual. Culturally, they think about the world very similarly to us in terms of putting the client first, taking fiduciary responsibility from a legal perspective. They're fee for service to their clients. They're not pushing products if it doesn't make sense, et cetera. So I felt really good about, when I start talking to these people. I think one of the concerns of anytime you get acquired is, someone acquires you and they think about the world much differently and more transactional as opposed to relational and doing the right thing for the client. I do think we found a very, very good partner, and I'm happy to report, it's early obviously, but things have been clicking. So I do have something to ask the board to do from an SEC perspective. This is considered a change in control, right? Mariner bought all of the stock of Anco Consulting. Now, I think importantly for you to know, all of the Anco partners, including Mike Welker, our CEO, who controlled, I think 75% of our shares, are rolling their equity into the new Mariner Institutional. So this isn't a kind of a cash out and sign a 2-year, 3-year deal and then walk off in the sunset. We really think this is the best interest of our firm to grow in the long term, best interest of our clients to bring them more resources. But from an SEC perspective, there is a change in control which requires clients to consent to assign your current agreement with us, which is not changing at all. It's the same scope of service, it's the same fee, same everything, but we do need to ask you to consent to assign it from Anco Consulting to, which is now Mariner Institutional. So that would require a board. I would humbly ask you all to consider doing that. Bonnie may have, if she is in the room, may have some comments for you on that. But before we get to that, I did want to answer any questions from the board on the transaction, who Mariner is, or anything related to the acquisition.
Brad, Tom, just let me ask a question. Just protocol, how many years had Anco served in its own, under its prior ownership, this board and this function?
Yeah, so we began back in 2001, I believe, as Bogdan Consulting Group, or the Bogdan Group. Joe Bogdan was the founder. Mike Welker, who is the current CEO, was employee number 2. In 2016, Mike Welker bought out Joe Bogdan and then started to spread equity. There's currently 20 partners, including Mike, in the company. But at that time, we changed names in 2016 from Anco Consulting, from Bogdan Group to Anco Consulting. So at that time, we went out to our clients and did the same exact thing because there was a change in control and a name change. So we had to go and get clients to consent to that change. So this is functionally the same thing. One of the reasons that we structured this as a stock sale as opposed to the asset purchase is that the entity, the Anco entity is staying on. It's just having a new name, but we're retaining our CRD number and our registration at the SEC as a registered investment advisor. It just, under a new ownership and a new name.
Right. So I guess my question would be, Bonnie, we're here, what our protocol should be in terms of how we handle this.
Fred, Tom,
Yeah.
this is Lindsay
Right.
Garner.
Yeah.
She's with Klausner, so she's representing. So if you have any questions about legal, I would address them to Lindsay.
You have the floor.
No problem. So, should you guys want to stay with ANCO, we are comfortable with you signing the consent and voting for it. We are simultaneously working on repapering the agreement with Mariner's name. It will include the same terms that we already have. It will include the same fee, but it will have 2 additional terms. So as Brad mentioned, this is the Mariner Wealth used to be personal. So we are requiring that your team, right, that's already assigned to you, has to do their own due diligence separate and apart from Mariner Wealth, as in the wealth side cannot tell the institutional side how to invest. They can't push a product on them without them doing their own research. So that's the first provision we're seeking to add. The second is that the wealth side cannot directly solicit your members, your retirees, your beneficiaries. There will need to be a wall up. Your retirees, beneficiaries are free to reach out to them, just like they could reach out to any wealth side, but the wealth side cannot use the data gleaned from this fund to do any soliciting. You are free to invite them to educational sessions, right? Some of these members leave with some money, and it's helpful to be educated on that side of things. You're free to invite them or other folks to educate your members, but those are the 2 main provisions we're seeking. We're in talks with the Mariner team. I expect to have a final agreement done this week, and then we will send them out to folks. But we are comfortable with you signing this should you want to stay with Mariner Institutional as of now.
How long is that contract up? How long does that agreement last if we re-sign it till?
So this is just a consent year agreement. It's negotiated, right? I think you guys usually do a 3-year term. I'm not sure if Brad has.
When is it up, Brad? When's your term up?
Brad, what are the dates of the current contract? When is the, I don't know if there was a fee guarantee, but when are those terms up?
So we're still operating under the original agreement that we entered into on December 2016. We haven't updated that. It's under the same agreement. So there's no fee guarantee anymore, but we obviously have not asked for a fee increase yet from you guys. And the terms are the same, and I don't know if I couldn't hear Bonnie, but at any time, we don't have a contract, right, guys? We have an agreement that you can terminate in 30 days notice, and I think we can terminate in 90-day notice. So effectively, you can get rid of us at any time when you're not happy. That will always be the case. That's how all of our agreements are. It's how all of your service provider agreements are, I believe. And that's not changing.
That's true. We have that in the agreement as well, that it's still the 30-day, 90-day termination. And yes, I looked up the fees. It hasn't been raised since 2016.
So are we actually in a position I don't think we're in a position to actually approve this right now if we actually don't have an agreement in hand?
So we are comfortable with it. We've had other boards consent, and with knowing that this agreement is coming, the Mariner team has been fully open to all of our provisions and have accepted them. I think we're just waiting on a couple of technicalities. If you want to wait for that till next quarter, that's totally fine on our end.
We approve, subject to a review.
Absolutely.
Subsequent review.
That's fine too.
Just prove the combination of the 2 firms.
This is exactly correct.
So that's
Correct.
So normally would we be you've received materials on this combination?
We have received that. We have had numerous conversations with their compliance team and legal team. We've had numerous conversations to get to the contractual language. We've interchanged data to make sure we know all the fees and the guarantees so that they're specific to clients. So we have done due diligence. And those provisions I talked about were our concerns, right? And we are contracting those concerns to how we believe is right.
Anybody else have any other suggestions, questions? So you're suggesting there can be benefits.
I'm sorry, what?
You're suggesting that there can be future benefits for the beneficiaries of the plan after they have it.
They're free to reach out to them, right? But we don't want them to use the data gleaned from the team. But yes, I mean, educational resources are good. I think Brad will say that they'll have more resources now, but we just want those two walls up to just keep the separate entities.
No cross-selling.
Okay.
So, I guess we would propose approving this
This agreement moving forward.
subject to a review.
Of a full agreement.
Final.
That's fine.
Is that what you want, Brad?
Yeah, from my perspective, they're two distinct things, right? This consent allows us to continue to operate as we have, and then we can update the contract per your attorney's wishes that we're going to be fine with whenever they finalize that language. So yes, I am asking you all to consent and vote to consent.
Okay, so do we have a motion to sign this consent agreement and put it forward? We'll make a motion?
I'll make a motion.
Second?
Second.
Is there any more discussion? Okay. Motion approved.
All in favor?
All in favor? Sorry. Aye. Thanks. Thanks, Tom.
Okay, Brad, that was an approval. And it's Lindsay here for Botany, just.
Oh, okay. Hi, Lindsay. Sorry.
Thank you, Lindsay, too. Appreciate your input very much.
All right, thank you all. I appreciate that. I probably should have done the performance report because we had a really good quarter, so I could have, greased the skis a little bit for the consent request. But if you, I don't know on your tablet what page this is, but it's page 3 of my presentation that says the market environment, major market index performance as of March 31st. But you can see great quarter for equities with the S&P 500 up 10.6%. We had international stocks up about 5%. Local currency returns were really, really strong, but the dollar was very strong as well, which ate into the U.S. dollar returns. And then we did have, after ending the year, I think 3.8% on the 10-year Treasury. We had interest rates increase in the period. We've had a pretty big move here in April. So the U.S. aggregate bond index in dark green down 0.8%, with corporate bonds doing a little bit better than government bonds in the period. So, I mean, a tremendous start to our fiscal year, right? We had 2 10+% returns for the S&P 500 back to back. We have a little pullback here in April, given the geopolitical concerns, I think, and then just, you get 2 10% returns in a quarter. Anything that spooks the market, it's going to do a little sell-off. Last 2 days have been okay, but I think we had about a 5% downturn up until yesterday in the S&P 500 in April. A couple percent points as I think we had about a 40 basis point move in the 10-year Treasury going from 4.2 to 4.6-ish here, as I think economic data continued to be very, very strong, employment strong, and the market's kind of realizing, okay, maybe we're going to be, in December, I think I read that the futures were pricing in 8 rate cuts or 6 rate cuts at some point. Now, I believe it's kind of like 50-50 whether they cut in the June meeting, and I think the probabilities are for 2 or 3 rate cuts in the second half of this year. So I think that we'll see what happens. The inflation story, we're still seeing, the headline CPI number, 3.5, and the last two two releases were a tenth of a percent higher than expectations, which I think spooked the market a little bit, and then raised rates. Although the PCE, which particularly the core PCE, which is the preferred inflation figure for the Federal Reserve, continues. I think there's a release on Friday, but that's, I think the last release for that was 2.7, 2.8, and that's trending nicely towards the 2% target of the Fed. So obviously, the geopolitical concerns in the Middle East are troublesome, and if they continue to escalate, that's not going to be good. We're seeing oil prices go up. If they continue to go up, that's obviously not going to be good for the global economy. So there are a couple of things to kind of worry about. But where we sit today, right now, when I get to the performance part, I'll be very pleased with where we're at for the quarter and where we're at fiscal year to date. Any questions kind of overall before I jump into the plan results?
No questions.
All right.
And Brad, with your page numbers, if you just want to add 8 to the pages in your book, that'll match the tablets.
Gotcha.
That works.
Yeah, you're going to make me do on-the-spot math, Kristen. Jesus.
You're the investment guy. You got this. I believe in you.
That's what calculators are for. So 14 plus 8 is 22 of your. Go to 22 of your tablets, please, which is the asset allocation summary. It just shows you December 31st on the left-hand side versus March 31st on the right-hand side. So you can see we went from $17.99 million December 31st to 18.87 asset allocation. As you would expect, given a strong return for domestic equity, we have a couple point increase in domestic equity going from 62 to 64, and then we have a decrease. Now we're a little bit under target for real estate, given slightly weak returns again. Another quarter weak returns there for commercial real estate, and we've talked about that. I'd be happy to address that further. Going to page 25 of your packet, which is the asset allocation compliance. So you can see here, relative to our investment policy statements, we're within policy for all asset classes. We're a little bit overweight equities, about 65 versus 60%, underweight, fixed income a bit, as the market is correct a little bit, we're a little bit closer. I'm not recommending a rebalance at this time. I'm comfortable where we're at. Next page 26 of your package shows you our financial reconciliation, the activity within the pension for the quarter. So you can see net transfers, highlight that. We obviously made significant move out of our active managers into adding money to the Fidelity 500 index fund, so that was accomplished. You can see, we basically have 10% now in managing the peer equity, 10% in MFS growth, and the remainder in Fidelity, which is what we wanted to accomplish. So you can see that we got a little bit of money from Intercontinental and Principal during the period, and not much. Contributions into the pension, $98,177. Distributions to retirees and beneficiaries, $331,196. Management fee to Intercontinental of $2,300. That's a little over $2,300. Other expenses in the period, $46,792. Dividends and income, $72,358, and then almost $1.1 million in capital appreciation during the period. So that netted out to that 18.87 mark as of March 31st. And then go to page 28 of your tablet. Great quarter for us. 6.52 net of fees, outperformed our policy index, ranked in the top 10 percentile of the national fund universe, so it's good to see a bounce back there. For the fiscal year to date, we're at 14.5% net of fees, and rank in the top 48th percentile. Obviously, we have some, given all the stuff that we talked about, just having manning the pier, the value manager, and then timing into our growth investments, a bit of a hole for the 3 and 5 year relative to our policy. But it's good to see a good quarter. Although, it's kind of instructive, right? It's really hard to time this stuff, guys. We sold out of MFS in a quarter where you can see here they outperformed by about 5%. So we would have been, I think structurally what we did was the appropriate thing, but the timing is a hard game to win. They bounced back significantly. I told you last year why they underperformed. They didn't own Tesla, and they had a significant underweight to Apple, where the index has 13%. They have about 5%. So those two stocks, Tesla was down over 30% in a quarter. Apple was down 10%. And they, were overweight the stocks that work. So you can see they posted a 16% return versus 11.4 for the index. They're now outperforming by almost 4% over the last year. Again, still have some work to do to dig out of the relative performance hole since inception, but obviously encouraging to see them, some of these bets pay off in the last quarter. Manning it appear, for the quarter, kind of in line, 8.3 versus 9 for the index. For the 1 year period, up 18, the index up 20. We talked about this in the past, right? Over a long, since inception period for this strategy, they tend to capture about 85% of the up markets and 75% of the down markets, 70-75%. So a year where the value index is up 20% is not one where we would expect them to outperform, and getting 18%, I think, is a decent result given their process. And then obviously our Fidelity 500 index fund matched the S&P 500, up 10.5% for the quarter and almost 30% for the 1 year period. Going to page 29 to go through the fixed income. You can see manning the pier a little under the index, 0.88 for versus 0.8 or 0.78 for the index. They're outperforming over all of their time periods, fiscal year to date, 1 year, 3 year, 5 year. We obviously navigated, I think, we'll see, knock on wood. I don't want to count our chickens as interest rates continue to rise here, but we have, we got defensive when interest rates were rising in 2022 and in the beginning part of 23, and got back into the aggregate in October, the end of October, beginning of November, technically, of last year, as the 10-year Treasury hit, that 5% mark, which shows you kind of, you can see the total domestic fixed income composite number in gray kind of shows you, we did a pretty good job of navigating the last 3 years with our fixed income only down 0.2% versus our policy index of down over 1, and the average core fixed income fund manager down 2% during that time period. So pleased with that. And then our diversified funds, we had some good timing. They produced some very solid results. You can see the floating rate funds up 2.6, 2.7 for the quarter. And over the 1 year period, we've gotten, 13 and a half out of both of those funds, both of them ranking the top decile of their peer group. So pleased to, adding that as a small allocation has worked out for us there. Any questions about the equity or fixed income managers or positioning right now? Okay, go to page 30 of your report. The real estate continues to be weak as valuation adjustments continue to kind of bleed through, particularly in the office space. Intercontinental down 4% in the period, Principal down 2%. Intercontinental continues to, have it, they significantly reduced their office, but are overweight, and I think, we had Tim Nashon, he kind of talked about how their office is a little bit different than maybe their peers, but they just having any office is being penalized from the third party valuation. I think they've taken from their high close to 40% write down in their office portfolio so far. So at a certain point, the valuations are going to become attractive again. I don't believe we're there yet, but we're certainly closer than we were 18 months ago. And if you look kind of at the corollary of the last two real estate downturns, you go back to the 2008 to 2010 period, which was, I think, given the financial crisis, not the best apples to apples comparison. I kind of go back to the early 90s, that period with the S&L crisis, where the Odyssey index, declined from peak to trough 24%, I believe, and we're approaching that now. We'll see how this thing kind of continues. I think the fundamentals for everything other than office are decent from what we're hearing from the managers. There might be a supply issue with apartments, but the fundamentals for both Intercontinental and Principal's portfolios for most of their portfolio, in terms of occupancy, ability to increase rents, et cetera, continues to be decent. So I'll keep my eye on that, and I just wanted to kind of, address that, and in the next quarter or two, if things start to look better, maybe we talk about pulling off our redemption, the money that we have in the queue to be redeemed, given we're now underweight that asset class. But I think it's a little bit early for that, so we'll just adjust. We'll continue to evaluate it on a quarter by quarter basis. Any questions?
Brad, I'm just looking at the inception returns, because obviously we captured the early, the last 3 years have been tough, but the first, looks like the inception dates were end of 17, beginning of 18. And I'm just looking at, compared to the aggregate index over that, let's see, I don't see, that's you have the inception back at 13, but so for the last 5 years, the ag index is annualized at 0.32. Is that correct? I'm looking at your page 21.
Yeah, so you're right. So if you look at my page 21, your page 29, the iShares Core U.S. Aggregate ETF, which we use as the net of fee proxy, over the last 5 years was 0.32%, right? So from an asset allocation perspective, it's still, we've done a lot better than that in real estate over the last 5 years, getting, 3% for our funds versus 0.3% for fixed income.
And for trailing 3 years, it's the ag is minus 2.48% through March 31. And
correct.
And it looks like we're annualizing an area of around positive 3.6. Is that right? That's for the index.
Yeah, and we're a little under the index, so we're at like 2.5. Still, meaningfully better than bonds, but a little bit, given the Intercontinental underperformance, a little bit under the Odyssey index there, and importantly too, right? Fiscal year end 2020, 9/30/2022, when equity markets were down 20%, bond markets were down 10%. We got about a positive 20% out of the allocation that fiscal year. So kind of as inflation was roaring, as other things were doing well, it kind of showed why we have it in the portfolio as a diversifier, as an income generator, and as an inflation hedge. So, it's like anything else, though. It goes through a market cycle. We're bearing the brunt of it now. We're, 18 months into this downturn. We're starting to see some signs of life from managers. Principal, for instance, has not given or not giving any capital to clients, but they've had about $500 million in their contribution queue that they have not called since March of 2022, and they just came out and did their first capital call in 2 years last month, as they're starting to see some signs of attractiveness for their core fund. So I thought that was an interesting data point, and we're starting to see some signs of life from other managers too. I think it's a little early. I'm not ready to jump in yet, but things are looking a little bit good, and I definitely think if we do get those 3 rate cuts in the second half, that's going to be a good thing for real estate and help unfreeze the market a bit. So we'll see what happens.
And just to review, we're not reinvesting any dividends back into these investments right now, but do we have a standing withdrawal order or not right now?
We do, right? So we put in a $150,000 redemption request back in October of 2022 for each of the managers. We've gotten about 15% of what we asked for from Intercontinental and about 10% of what we've asked for from Principal. So we still have, out of 300,000, let's say we have 250,000 in the redemption queue right now. Yes, you're correct. We are not reinvesting dividends. So they're both levers that we can pull. We can turn the drip back on, and we can cancel our redemption queue if we think it's the right move to do.
Are those redemptions automatic then, such that if the sponsors offer capital that would be automatic, or do they give you a kind of a?
So they do it on a pro rata basis. So they say we're going to pay out 5% of our redemption queue this quarter. So we get 5% of what we ask for when they make that determination. So they have, basically all, we can't force them to sell a building. They have complete control over when they make these distributions and redemption queue reductions.
I think my point is that if they do offer, if they open up their coffers, that would be triggered automatically, and we would get a transfer.
No, you get
an option at that point, right?
Yeah, so it doesn't. It's not like a one-to-one. If they ask for money from your investors that are in the contribution queue, it does not mean that they automatically pay out their entire redemption queue. That's not how the documents read, because the capital call, they're kind of unique because of how they're structured with their insurance separate account. They actually are galley valued. So unlike most managers would say, hey, you want to give us $1 million, we're calling that capital contractually here. Principal actually, I have 2 clients that had paperwork done in the first quarter of 2022 that did not get called. They said, hey, we're accepting new contributions effective April 15th, but you don't have to give it to us. You have up to a year to give it to us. So they're providing more flexibility. And because of that, I don't believe that, and I don't think any fund just does a one-for-one offset. There's some, and I could have my real estate guy explain it better than I do, but it's not like if they take in $1 from a new investor, they're going to automatically pay out $1 to a redemption investor. That's just not how the fund is structured.
Yeah, it's what might trigger it is they have a transaction. They sell a property. They refinance the property. The new money, we obviously like to
they grant withdrawals, ours is automatic. They don't come back to us and say, you were in a queue, do you want to exercise that option? It's just automatic.
Yeah, right. So they make a determination based on liquidity, if they have, were able to sell a building, et cetera, what percent of the current redemption queue they can pay that quarter. And then they will pay. So for instance, Intercontinental, I don't even know why they did this, but last quarter they said, we're paying out, I think it was 1.5% or 2% of our redemption queue. So of the outstanding money that we had in our redemption queue, so let's say it was 130,000 out of the 150 the original, we got 2% of $130,000 in the beginning of April. So if principal says next quarter we're going to pay out 25% of our redemption queue because we sold a couple buildings because things lightened up, we would get 25% of the amount outstanding that we have in the redemption queue. Does that make sense?
Mm-hmm. Yes. Thank you.
Okay. You're welcome. All right. Well, that's all I have for you guys. Again, thanks for allowing me to call in. I appreciate it.
Thanks, Brad. Take care of your family.
Thanks, Brad.
Anybody else have anything for Brad before he goes? Good. Thank you, Brad.
Brad, you want to stay on, or do you probably need to take care of some things?
Yeah, I'm going to get off. I appreciate it.
Okay, thanks, Brad. Bye-bye.
Okay. That's it for Brad. So, fortunately, unfortunately for Bonnie, she's not here today. She's going to have a grandbaby. We have Lindsay Gardner, which is with the firm, and she's going to give us the legislative update. And if there are any questions for her, thank you, Lindsay, for being here.
I have two memos that I want to go over with you today. The first one has to do with the disability retirees. So in March last month, the IRS provided a notice that they made some changes to the 2023 instructions for the 1099-R. They have noted that being a disability retiree may not be subject to federal income tax, but they also noted that any portion of the benefit that's based on length of service is taxable. So we are recommending to the plan for any disability retirees that you split apart the payments into two separate 1099-Rs, so one a taxable and one non-taxable. This is going to be a case-by-case basis, so we're happy to work with the plan admin, with Chrissy, to determine when those things are taxable or not. And then going forward in the future, all of the disability orders coming out of our office will note these tax changes so that the member is aware and so that the board is aware. Nothing for you to do all right now, just an FYI for the plan admin on the disability retirees. And we could chat separately on the coding.
I think I missed that memo, but I will reach out to you.
Perfect. And the second reminder is just your Form 1 filing. So you guys have to do this every year, July 1st. It has changed since last year. Typically, you did a paper copy and you sent it to the Board of Supervisor of Elections in the county you reside in. You're no longer going to be doing that. You're going to be filing everything online via electronic database. You should have received an email from the Commission on Ethics at this point. If you haven't, let Chrissy or I know, and we can reach out to the clerk to make sure your email was put in there properly. Basically, the clerk puts in your email, and then the Commission sends you an email based on that, which will allow you to create a login and a password. So that is due July 1st. For you, Jerry, you're going to have to file a Form 1F within 60 days of resigning. I'll send it to you. It's the same form. It's just called a Form 1F, but it's still it's the same financial reporting that you'd usually do. You just are required to do it when you are leaving office, unless you're planning on joining another board, which I take that you probably are not. So it'll just be a Form 1F.
You got time?
Lindsay, just to confirm, he doesn't need to do a regular Form 1 and also just the Form 1F.
I believe, actually no, he needs to do both. Because your Form 1 is for your 2023, and your Form 1F will count for this year. I've looked this up previously for another trustee. So you'll need to do your Form 1 and your Form 1F. All filing online.
Chrissy or Troy maybe will help further that with it.
We,
If you have just paid and doubled it to nothing, and he still won't spend his money.
we don't have access to the system, but the other day I was actually with another trustee, and he allowed me to look over his shoulder at the system so I could kind of see what's in there. And because I've never had to do one, I don't know how to do this, but I imagine, your Form 1 and Form 1F will basically, you're submitting the same thing twice, essentially. But if you have any issues, just reach out to one of us.
So I don't recall getting anything yet as far as
link?
from the supervisor. So I don't know how, we've not received anything.
I will, it's still early, so I'll reach out to the town clerk and see if she has put you all into the system yet. Once you are in the system, and she's going to ask, if you're not in the system, she's going to ask me or Troy or Lindsay or whomever, it's going to be me, probably since I'm bringing it up now. She's going to want to know what email address to use, and whatever email address she enters into the system is the one that you need to register with. So are all your email addresses that you receive pension correspondence, are those good email addresses?
Yeah.
Okay, so I'll reach out to her, and then I will also send you all an email that has a link to that electronic Form 1 system that's got some instructions and everything. And we'll keep our eye on this as well. We won't let July 1 come up and you all start getting fines. Actually, the fines don't start until September 1st, so you still have plenty of time.
Yes. And we've
we
heard
will
some,
keep an eye on you.
we've heard mixed, some trustees, not on this board, but other trustees have received the link, so I don't know if they're doing things not all at once. But it's been inconsistent, so we can follow up on the clerk, with the clerk. And those were all my updates.
Do we have any questions for Lindsay? Thank you very much, Lindsay.
Yep.
Okay. Foster and Foster, you have some updates?
Yes, okay. I'm Christy Stoker. I'm one of our plan administrators on the southwest side of Florida, and Troy Jenny is one of our plan administrators. He lives in Jupiter, soon to be Daytona. So he is on your coast and much closer geographically, but the two of us will be coming to the next few meetings together, at which point I will stop showing up, but I'll still be a resource for you all as a board and for any members and the town, just as a cost savings to you all. For me to drive here and back is expensive with the mileage rate and such, so I'll still be available, but Troy will be coming to your meetings. I've been doing pension for, it'll be 6 years now. I started off with a special fire control rescue district and graduated to Foster and Foster, and we've got a great team. So I know you're used to Michelle Rodriguez, and we were all just as sorry to see her go. It was sudden for us as well, and but rest assured, your plan is in good hands. We have a team of very capable and knowledgeable plan administrators, plan administration analysts and assistants. So we're just kind of working out the details of the assignments, but Troy and I will be attending your meetings over the next few quarters. So I'm looking forward to getting to know you guys, and thank you for allowing us to be here today.
Troy, any relation to Farrell?
Yes, I am actually, my sister-in-law. So I just retired.
She was our previous plan administrator, I think, when Jerry and I started.
That's right, yeah.
Yep.
She's the guru. She's the one who teaches us all.
Definitely an asset to your company, for sure.
She is a partner now and the lead plan administrator, so she has really grown our division. I took a picture in here and sent it. She said, "It looks the same as it did 10 years ago. I miss it. Tell them all hello." So I don't know how many of you were on the board 10 years ago, but Farrell says hello.
Awesome.
And
Thank you.
just to further introduce myself, I'm a retired police officer from Jupiter, Florida. So I did 25 years, my last 12 as a detective. So I've been through the pension process, and it's going to be my job to make sure that everybody, in your two plans are taken care of.
Awesome. Appreciate that. Appreciate your service, too.
For your fiduciary liability insurance, you were on a one-year policy, and I'm just going to go to, it's page 62 on your tablets if you want to see the quote. But basically, your quote for another one-year policy with the same limit of $1 million in the aggregate, the premium quoted was $4,087.47, which is $32 more than the expiring premium. So not much of an increase at all, which is great to see. And actually, your cyber quote went down by $6, so that was shocking. But to bind coverage, a motion will be in order if you do want to renew the same policy with Ulico for your fiduciary liability.
Okay, so we're going to make a motion to renew our fiduciary liability and our cyber liability insurance. Do I have a
Second.
second?
Oh, who made the motion? I'm sorry, I missed that.
Well, did somebody make the, I can't.
Oh, okay, so maybe, okay, Fred? No?
So Tom made the motion. Do I have a second?
Okay, I think,
Fred second, Tom second, okay. All those in favor?
okay, so we will renew both of those quotes, or those policies. And then as far as education, if any of you want to go to the annual conference is coming up, that's one, it's more, networking, kind of more social. Everyone's got the booth and there's, little goodies you can grab and see all the vendors and some speakers. And then the trustee school, the next one will be in the fall in Orlando. So if you do want to attend any educational sessions, just call our office and we will work with you on the registration and reimbursement process.
So, to that, I actually will receive my certification
Oh, good.
on June. I've been to the 3 classes, so I can't say enough good things about the FPPTA. It's just a really great resource for us, great group of people. They've been around for 40 years. This is their 40th year. Grown from nothing to, I think there's 1,000 attendees. There's 3 separate classes you take to get your certification. So I really, got a lot of respect for what they do. And if you're interested, they have a lot of resources that we can all use on the board here. So thank you for that.
So you'll get your CPPT certificate at the fall, or I'm sorry, at the annual conference?
Yes.
Excellent. Congratulations.
And I even go on to my daughter, the first year I was in there, she received a scholarship from them. They give scholarships to students, so she received a scholarship, so it's really worked out.
Very nice.
Okay. Our next is the consent agenda. You guys everybody had a chance to look over that. Anybody have any questions for, there's one.
So yeah, the invoices on warrant 100, those that are not highlighted in yellow on the summary of payments, those were already approved and paid. But everything that's highlighted in yellow hasn't been paid yet, so we're just seeking approval of those payments. I was speaking with Rick before the meeting of just about the authorized signers for the plan, and Michelle was the one who was, reviewing all the invoices, making sure that the fees agreed with the current contracts in effect. And so with her gone, being the one who signed off on the warrants, we're seeking payment approval today for the board of all the invoices listed on warrant 101, and if so, we will request Salem to get those paid.
We have to make a...
So that's a total of outstanding invoices right now.
The yellow.
So yeah, all the yellow have not been paid yet. That is correct.
So that doesn't sum to 24. It's less than that, right?
Probably a little bit. It's about $10,000 less, right? Yeah. So do we need to make a motion for that, Chrissy?
Yeah, if there are no questions or concerns about the consent agenda, which also it also includes the fund activity report, but there was no member activity, so I have nothing to report there. But yes, a motion would be in order for the consent agenda if you are so inclined to approve it.
We have a motion.
I move that we approve the consent agenda.
Motion by Fred. Do we have a second?
Hey, Jerry.
It's going to be Jerry's last second.
At the last second.
All right, all those in favor?
Aye.
Okay.
Thank you. We'll get that paid.
Trustees, anybody here have any report, discussion, or action? Like we've already said, we just want to thank Jerry for his service. We appreciate he's done. I mean, Jerry's a resident of this town for I don't know how many years.
But I'm no longer a resident.
He was, right? And you know, definitely served on more than one board, so you really, the town's got their money on you.
Yeah, that's a good
Discussion.
Yeah.
The process for, unfortunately,
Okay, so the process for that, I think, well, the town clerk will open up they'll open up to town members or somebody to be there, then we'll sit together as a group, we can interview them, we'll look at their stuff, and then as a group, we'll choose somebody to be the member at large. Kyle and I are from the police and fire, you guys are from the town, and Jerry was so I guess we'll have that maybe by, next, I don't know how long that will take, the process.
When's our next meeting scheduled for?
July, our next meeting's July, and so I don't know,
We won't
maybe,
have
I don't think my next meeting, because, we also know about,
You probably have to have a public.
sure. Well, plus we have to, everybody's kind of went back up north. So I think we might not do that till our October meeting. I don't know if is that okay, Lindsay, to?
Yeah, so Jerry would be holding over. So Florida's a holdover state, so Jerry would be holding over until you guys picked a fifth trustee, whether he comes to the meetings or not, unless he resigns, right? If you resign, then the seat is vacant. So it's, the same thing. So if you guys ask the...
What do I have to do to make the resignation formal?
You would, you could say it here that you are resigning as of today, or you
Sorry,
can...
I can't hear.
You can say today you are resigning effective today. You can send Chrissy an email next week.
I thought I said that already.
It's as of today. Then it will be a vacant seat starting tomorrow. So in that case, you can ask the clerk to do a public notice.
We don't accept your resignation.
And there can be...
I divorce you, right?
Okay, so Gary's effecting immediately today, so that'll...
So it will be vacant.
Vacant.
The clerk can put the notice out. If there are any names submitted, you guys...
what constitutes a quorum if we haven't resigned?
3 people.
3 people would constitute a quorum? 3 or 4 actors.
Did you two, you're going to be up north in July? Oh, you, okay.
It still would be 3.
I'm not sure I'm going to be here this year.
Fred, you got a social calendar, Fred?
Let's assume that I'm going to be here, but so there would be four actors that we would, at that point, but we would.
It would still be 3 people for any business to be done.
And if we can't get a quorum, then we would have to reschedule.
Correct.
I mean, I don't know if you guys have a couple, I don't even know if I'll be here July 20th.
Florida still requires
In-person quorum, yes. But if you can't meet in July, you guys still have August and September in that quarterly time period because you need to meet quarterly.
We have to have a meeting with them. We can have a meeting in the quarter. We can have a meeting the day before and the day after. So maybe we can provide Chrissy or Troy with some dates.
How do we change that date? So I might be away again.
You guys can change by...
I think we're July. What is our meeting right now?
July 23rd.
You can change it by consensus. You just have a public notice a week before, so you have plenty of time to figure out that date.
Are you guys pretty flexible? Because it would just be the 3 of us.
Right, yeah, I mean, that's fine. It doesn't have, So, right, do we just...
I'll be here, but I'm going to definitely be here like July 7th through the 12th or something.
Okay, so we'll get together for that or something with Troy probably to...
Do you get emails from Iris? Do you all get the quorum confirmation emails? Okay, just communicate clearly with our office and let us know, and if we can't get a quorum, we'll reschedule. We'll make it work.
Well, like Tom said, it looked like, so I don't know how far in advance Iris puts it, but Tom, you look like you're available before the 23rd. So maybe if we could have Iris maybe the 1st of July, maybe start looking to see what it did. Huh? What, the 5th? Yeah, we'll do the 5th of July.
Like after the 4th.
Yeah, somewhere like that, because if the meeting has to be, because what you said, Tom, you're not going to be here at the end of July.
I'm not completely firm right now, but
Well, Fred has your social calendar.
I think July 9th will probably be.
And what day is it? saying, Cal?
I'm not one of Disney World, by the way. July 9th.
No, you got, Fred, Tom, August, is August better or worse for you? You're gonna be gone. Fred?
I'm itching into seasonalism.
All right, let's just play it
The
by
7th, the 9th isn't good for you guys?
July the 9th. I have to check with my social calendar. I don't know that. My wife makes that.
Is there something sacrosanct about Tuesdays? Or?
Well, that's like, we usually go away for vacation in July. I don't know. I'm the last one to know, so.
I mean, I think the ninth would be okay.
Okay, that's okay.
We'll figure it out.
But I guess, Troy, we can tentatively say July the 9th. Is that good with you, Kyle?
The 9th, July 9th, it looks okay on my calendar for right now. That's a
So, yeah, just put it in there, and if something comes up, then we can go from there.
Same time.
Same time?
Okay, yeah, and I'm free the 9th as well. Lindsay, are you available on?
Bonnie or I think can cover.
Okay.
Bonnie will be well over the grandmother and things like that, right?
So are we moving forward with July 9th at 2 p.m. or are we still kind of?
I think that's fine with me.
Civic duty.
Okay.
Yeah. Appreciate it, Tom.
So, Chrissy or Troy, will you guys be reaching out to the clerk to do that notice, or who usually handles, for the 5th trustee, who usually handles reaching out to the clerk? Is that something you want our office?
Yeah, I can do it.
Okay.
I'm going to reach out to her anyway about the Form 1s. So in the same email, I'll just mention this too.
Great.
We'll have an